Welcome to Mad Money. Welcome to Cramerica. I'll be my friends. I'm just trying to make a little money. My job is not just to entertain, it's to educate, it's to teach. So call me at 1-800-743-CNBC. Tweet me at Jim Cramer. You know why I always say own Apple, don't trade it? Because despite the myriad bears, and there are endless haters, this company always comes up with the best there is, the most beloved products on earth. And that's why you can't trade it. That's why you must own it. Apple stock surged today on the backed by some hefty research reports, helped buoy the entire stock market, with the Dow gaining 516 points, the S&P jumping 1.07%, and the Nasdaq pole vaulting 1.37%. Apple soared because 3 different analysts went out positive the stock at once, including Ben Reitzes from Amelia, who's been he's been on board the whole way. But let's face it, you could have easily gotten in the whole gain at Apple if you simply watched this show or belonged to the CNBC Investing Club, and recently bought my new book, How to Make Money in Any Market, because I flog this darn thing every day. Hey, nothing wrong with a little shameless self-promotion, given that I've been right on the stock the entire way. I've said over and over and over again that as long as Apple makes the best products, people will buy them, and the stock will eventually play catch-up. You will never catch these big moves like today entirely unexpected if you're constantly flitting in and out, in and out. You will be selling at the bottom and buying at the top. Sure enough, the recently released iPhone 17 series is a monster hit. Whether it be the lightest one, the iPhone Air, which feels like a candy bar in your hand having felt it, or the heaviest duty, or the one in between. It's all there, right down to the selfie taking that auto-adjusts so nobody's cut off. Now, you can say I had an edge on everyone. That's how I found it, because we took selfies with Tim Cook, the CEO of Apple, and he talked about this wondrous selfie sensor. I meet people all the time now with the 17, and we take pictures that are always good. There was a time not that long ago when getting a decent photo took some work, and you had to have someone with long arms, like Cece Long Arms Cramer, my daughter, who takes all the selfies because that way no one gets cut off. I split people right down the middle. Or maybe I had an edge because when we worked out the pricing when we were in Kentucky, we learned from Tim that taking into account the trade-in value of your current iPhone and the subsidies from the wireless carriers, there would basically be no increase in price. Regardless of the tariffs, how many analysts told us it'd be $200 to $300 more? Who can afford it? Again, though, that's something anyone could have figured out. Or you could just watch your interviews with Cook and spare the arithmetic. But the bearish analysts never factored in the trade value and rarely thought about the providers who were at war with each other. And Apple's phone is the principal weapon of getting new subscribers. Or maybe we knew that the iPhone Air was as light as a candy bar. It simply looks really cool. Something that Tim Cook gets, and a lot of customers want it. But again, that's not like it was inside information, particularly that it was selling so well in China. This rally in Apple was totally gettable. The bullish facts were all there. But so many people missed the move because there's a whole cottage industry of people pumping out negative data points on Apple. Everyone made so much of the departures of Apple programmers, some going to Meta, where they compete with a new form factor that combines glasses with a device in your pocket. At the same time, we heard that Siri's a bozo who will bum you out. We heard that China sales have to be weaker because the government no longer likes Apple. We heard that the new phones were merely incremental and not noteworthy. We heard the usual lead time issues, the slowing nonsense, and, of course, the tariffs. All of these issues were canards. Most were hatched by people who were unwitting, useful idiots for the short sellers. Still, others simply weren't listening to both sides. Or as Mellus Righteous says, quote, Apple is on a mission to silence its critics. We see upside in sales in China into calendar year 2026 and momentum in new models overall. Yes! He goes on, quote, while the media is obsessed with AI talent departures and focused on AI delays, Apple could have the last laugh as the new Siri could be launched in March. And Apple's poised to expand its hardware lineup with a touchscreen home hub and cameras, a tabletop robotic assistant, and even a mobile robot for the home. Who's thinking about this stuff? The bulls. All 3 analyst reports today said that Wall Street's earnings estimates were probably too low, not just for the year, but maybe even for the out years. I think that makes sense. It explains why the price earnings multiple looks high, but might come down when we see the real earnings. And you'll have missed it if you're trading. I also like what Evercore said in its tactical buy call that Apple's service revenue could continue to grow at a double-digit clip. I like Loop's approach in its upgrade, too. Listen to this, quote, time to sink your teeth into this Apple's multi-year iPhone run. Okay, well, that passes Wall Street humor. Come on. Loop's anticipating a foldable phone in September of next year. How big will that be? What's missing from all these upgrades and pushes is that Apple's one of the most loved companies in the world, but you can't factor that into a spreadsheet. There are 1.5 billion iPhones in use. The company puts out incredible products that are adored. Think about it. Do you ever hear about anyone else's phone launches? An Apple phone brings lines around the block in a host of cities around the world, China, Japan, you name it. That means nothing to the analysts, but it should mean everything to you because it keeps you blind from being blinded by the negativity that Wall Street keeps pumping out about this company. Apple's install base is so large that Google pays them more than $20 billion to be the de facto search engine. That relationship was blessed by a federal judge who initially ruled that Alphabet was monopolist. Once you knew that Apple could get what it wanted for just using the best search engine rather than developing their own, well, you know what that told me? That Apple maybe could even do the same thing with artificial intelligence. Why spend hundreds of billions of dollars to develop your own AI and all the nuclear power plants and stuff when the companies behind these chatbots may actually pay you for the privilege of being the iPhone default? They could open the bidding and say 30 billion. I got 30 billion. I see 31. I got 32 in the back. I see 31. You bet. $35 billion. Talk about fabulous gross margins. That's what I think they could actually have to pay them a year to be in their phone. You have to believe that with so few distinguishing factors among the chatbots, the only way to justify the spend is to become Apple's AI conduit. It's a natural move, and it wouldn't cost Apple a penny. This is the kind of thing that happens when you have the most popular product on Earth. Now, there are a lot of misperceptions on Wall Street. This weekend, I wrote to CNBC Investing Club members explaining how Salesforce, for instance, demonstrated convincingly that real clients, think Williams-Sonoma, FedEx, PepsiCo, Dell, are saving money using the Agentics, okay, that's their product, and building better revenues with their Agentforce platform. Nothing's being cannibalized. Amazon, despite its painful web services outage today, may actually be reaching a bottom, and that's what it means when your stock goes up on bad news like Amazon did today. But to me, the amazing thing is how traders have managed to make almost no money in Apple. Sell.
The House of Pain.
Because they trade in at highs and sell at lows. They can't take the constant negativity that the analysts pump out and the press comes out and all the people who come on, the money managers, they can't get it right. I do blame the analysts and reporters who and the short sellers who work so hard to get you out of the stock. They accomplished their mission. They worked themselves to the bone, scaring you away from Apple. And now they have to take up their numbers and eat some crow. I think some of these people are irresponsible. Others are weirdly biased. Others should be just fired for their poor analysis. Yeah. All right, but the bottom line. If you use common sense, if you checked out prices from the phone carrier at Costco, you asked a salesperson for specs at an Apple store, then you had everything you needed to know why you should own, not trade Apple. The owners are the ones who got to participate in today's rally. It's why I spend so much time in how to make money in any market, saying you got to stick around these great stocks rather than flitting in and out, because that's how you lose money. Harish in New Jersey. Harish.
Hi, Jim. How are you?
I am doing well. How about you?
Fantastic. Wanted to know your research on Adobe. What do you think of Adobe?
A lot of people comparing Adobe to Salesforce and saying that Adobe can make a comeback like Salesforce did. I think they're two different animals. The problem with Adobe is they got some very powerful competition. I think the stock's come down a lot, but it still doesn't make me want to pull the trigger. How about Robert in New York? Robert!
Jim, I have to tell you, thank you so much for inviting me to that interview with Jensen Wang. I got to tell the listeners out there, what you see, Cramer, is what you get. Honest, modest, and integrity. Jim, I got to tell you, when I met you and watched what you did, you were the kindest. You made people millionaires. That's why they have to join the investment club.
Jensen made, thank you. Jensen made a millionaires. I got a minute, which I feel terrifically about, and I know you talk about that, Robert, and I can't thank you enough. We made many millionaires in Nvidia, many millionaires, and I think they'll be drawn to what I write and what I read, and thank you for that. How can I help you now?
Jim, let's talk about a company that has been struggling lately amid rising operation costs and competition. Their earnings are due out in November, and I think this report will be positive because of the increased attendance in the theme parks. You got to own this stock before the earnings report. It's going higher, in my opinion, but I need your blessing. It's got good management changes. Disney.
Okay, I think at this level, Robert, it's good. I do speak a lot with Jeff Marks about it. I expressed some displeasure today saying, oh, my God, it's still at 111. I thought it should be at 120. I think it gets to 120. At 120, we're going to have to reconfigure and rethink. Thank you for what you said about making people millionaires. We change lives. I'm looking at Regina Gilligan, my executive producer, and she and I talk about this all the time. We change lives. That's what this show does, and I'm very proud of it. All right, if you use common sense, then it would be easy to own Apple through all the negativity. And the owners of Apple that were able to participate in today's rally were not the traders. They were the owners. I'm Mad Money tonight. Earnings tend to be a negative catalyst for the stock of America's best, but after reporting last week, Wall Street actually liked this report, sending shares higher. So could this momentum continue? I'm breaking down the quarter and giving you my take. And investors have turned to gold as a flight to safety, with U.S. Treasury standing in the shadow. So what do you make of the safe haven dichotomy? I'm going off the charts to find out. And Ulta has spent much of the last few years in the doghouse. But now that the thesis is starting to look a little prettier, I'm digging into how the company got back on track. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.